Imagine a marketplace where you can trade on the outcome of future events, just like trading stocks. But instead of buying shares in a company, you're speculating on real-world questions, anything from the weather to politics to sports. This is the world that Kalshi opens up to everyday people, giving them a new way to interact with the news and events that shape our lives. Instead of company shares, you buy contracts predicting whether something will happen. These contracts are simple, clear, and based on yes or no questions about future events. Buy a yes contract if you think it will, a no contract if you don't. It's as straightforward as making a call on what you believe will happen next. The price of each contract, from 1 to 99 cents, reflects the market's belief in the event's likelihood. If a contract is trading at 70 cents, the market thinks there's a 70% chance it will happen. The closer to 99 cents, the more likely the market thinks it'll happen. If it drops closer to 1 cent, the market is betting against it. Kalshi is a leading platform in this space, operating as a federally regulated financial exchange under the CFTC. This means it's held to strict standards, similar to major stock exchanges, ensuring transparency and security for its users. Unlike traditional betting, you're trading directly with other users, not against a house. The market itself determines the odds, and your profit or loss depends on how the event unfolds. Kalshi's role is to facilitate these trades and collect a small transaction fee. It doesn't take sides or set the prices. It simply connects buyers and sellers. When the event's outcome is known, contracts settle. Yes contracts pay out $1 if correct, no contracts if not. This makes the process transparent and easy to understand. Kalshi positions itself as a financial tool for hedging risk or leveraging knowledge, not as a gambling service. For example, a farmer might hedge against bad weather, or a business might manage risk around political decisions. Recently, Kalshi expanded into sports, arguing that major sporting events have real economic impacts. The outcome of a big game can affect everything from local businesses to national advertising revenue. A championship win can boost local economies, merchandise sales, and TV ratings. These ripple effects are why Kalshi believes sports belong on its platform. By framing sports outcomes as economic events, Kalshi has attracted both sports fans and traders. It's a new way to engage with the games you love, while also participating in financial markets. This move, however, has brought it into conflict with established sports institutions like the NCAA, who worry about the implications for athletes and the integrity of the games. The debate is just beginning, and the future of event trading is still being written. Trading on a football game with Kalshi might look like betting at first glance, especially if you're used to the excitement of picking winners and losers. But beneath the surface, the mechanics are fundamentally different, offering a unique experience that goes far beyond traditional wagers. At a sportsbook, you're always betting against the house, which means the odds are set by the operator, and the house profits whenever you lose. On Kalshi, you're trading contracts directly with other users, peer-to-peer, so every trade has a real person on the other side. Kalshi's role is simply to match buyers and sellers, creating a transparent and open marketplace. The platform itself has no stake in the outcome of your trades. Instead, it earns a small fee on each transaction, much like a stock exchange. Contract prices aren't fixed. They're set by supply and demand, shifting as users buy and sell based on their views. This means the market's collective view is reflected in real time, with prices moving as the game unfolds and new information emerges. Unlike a locked-in bet, Kalshi contracts can be bought or sold at any time before the event ends, giving you the freedom to adjust your position. For example, if you buy a yes contract at 30 cents and the team's chances improve as the game progresses, you might decide to sell at 60 cents for a profit. No need to wait for the final whistle or the game's outcome. This flexibility introduces a layer of strategy, much like trading stocks or commodities, where timing and analysis matter. Sportsbooks typically don't allow this kind of active trading or early cash out, locking you into your bet until the end. Kalshi's model lets users react instantly to live information, shifting probabilities, and breaking news as the game unfolds. Traders may focus on price movements, market sentiment, and evolving odds, not just the final score or the outcome of a single play. This approach reframes participation as informed trading, where research, timing, and strategy play a central role, not just simple wagering or luck. That's why Kalshi is regulated as a financial exchange, not a gambling operator, and must meet strict standards for transparency and fairness. The distinction is central to its identity. and at the heart of its ongoing legal battles and regulatory debates. It's a new way to play, blending the thrill of sports with the sophistication of financial markets, and a new way to think about sports, where every moment, every play, and every decision can shape your trading strategy. Kalshi's legal status sets it apart from traditional sports betting. Sportsbooks are regulated state by state, creating a patchwork of laws. Many states, including California and Texas, still ban online sports betting. Kalshi, however, is federally regulated as a designated contract market by the CFTC. This allows it to operate in most states, even where sports betting is banned. Kalshi argues it's a financial platform for price discovery and risk management, not a bookmaker. The CFTC's approval of its sports markets supports this claim, but state regulators disagree, saying trading on game outcomes is still betting. Over 30 state attorneys general have challenged Kalshi, demanding it stop offering sports markets or comply with state laws. The outcome of this federal versus state battle will shape the future of prediction markets in the U.S. The NCAA has long worried about the impact of betting on college sports, but Kalshi's nationwide reach has heightened those fears. As the landscape of sports wagering evolves, the organization finds itself facing new and more complex challenges than ever before. The main concern is that widespread betting could tempt athletes, coaches, or officials to influence games for financial gain. Even the perception of impropriety can damage the integrity of college sports, eroding trust among fans, students, and the broader public. Kalshi's federal status means people everywhere can trade on college games, even in states that ban sports gambling. This creates a patchwork of regulations that is nearly impossible to enforce consistently, making oversight a daunting task. This makes it harder for the NCAA to monitor and protect student athletes. The organization must now contend with threats that can originate from anywhere in the country, not just within state lines. The risk isn't just corruption. Student athletes could face harassment and pressure from those with money on the line. Online abuse and direct contact from angry bettors are becoming more common, adding stress to already demanding lives. A missed play becomes a financial loss for someone, leading to abuse and scrutiny. The emotional toll on young athletes can be significant, affecting their performance and well-being. The NCAA also worries about the appearance of partnership when Kalshi uses official data, blurring lines between sports and betting. This could undermine the NCAA's mission and reputation. The organization is fighting to keep college sports focused on education and fair play, not gambling. As the stakes rise, the NCAA's challenge is to protect its athletes and preserve the spirit of the game. In October 2025, the NCAA confronted Kalshi directly with a formal letter outlining urgent concerns. The NCAA objected to Kalshi's website language, which implied official NCAA endorsement. They demanded the wording be changed to clarify that outcomes are sourced from NCAA.com, not verified by the NCAA. The letter also pressed Kalshi to clarify its stance on prop bets involving college athletes, bets the NCAA finds especially problematic. The NCAA asked if Kalshi would consider banning these markets for college sports. Finally, the NCAA sought a commitment from Kalshi to cooperate on integrity investigations, as regulated sportsbooks are required to do. The message was clear. The NCAA expects transparency and action. Kalshi's response would set the tone for their ongoing relationship. Prop bets, wagers on specific player stats, are at the heart of the NCAA's concerns. These bets are easier for a single athlete to manipulate than a game's final score. Kalshi's introduction of college prop markets in 2025 opened the door to new integrity risks. Real incidents have already occurred, including a Fresno State player manipulating his performance for a prop bet scheme. The NCAA sees prop bets as a direct path to corruption and has called for a nationwide ban. Kalshi's federal status limits the NCAA's ability to restrict these markets. The existence of prop bets on student athletes makes policing college sports far more difficult. Kalshi has responded to scrutiny by emphasizing its robust integrity measures. As a federally licensed exchange, it follows strict CFTC rules to prevent manipulation and fraud. In 2025, Kalshi partnered with IC360, a top integrity monitoring firm used by major sports leagues. IC360 tracks suspicious trading patterns, aiming to catch potential abuse. Despite these safeguards, critics point to incidents, like a CEO influencing a Kalshi market, as evidence of vulnerability. Kalshi says it's reviewing the NCAA's requests and remains committed to integrity. But the NCAA argues that some markets, especially prop bets, are inherently too risky to exist. Kalshi's sports trading volume has soared, with $2.5 billion in contracts traded by the 2024 NFL season. While still smaller than the $14 billion monthly handle of traditional sportsbooks, Kalshi's rapid growth is drawing attention. High-profile hires like Donald Trump Jr. as a strategic advisor signal its ambitions and political clout. The NCAA's recent engagement with Kalshi shows reluctant acceptance. Prediction markets aren't going away. Industry experts believe sports governing bodies must now adapt to this new reality. Kalshi's financial success and strategic moves make it a formidable force in sports and finance. The landscape is changing fast. Kalshi and other prediction markets have transformed the landscape of college sports. The NCAA's efforts to keep gambling at bay are being upended by federally regulated platforms. For fans, prediction markets offer a new, interactive way to engage with games, blending analysis, trading, and excitement. But for college athletics, the risks are real: increased pressure, potential harassment, and greater temptation for corruption. The NCAA's struggle with Kalshi reflects a broader battle to preserve amateurism amid commercialization. The future of college sports will depend on how all stakeholders, leagues, regulators, platforms, and athletes navigate this new terrain. The questions raised now will define the next era of college athletics.